Did you know that your credit score can cost you hundreds and thousands of rands over your lifetime? As you all know, this channel is all about saving money and making good financial decisions. And one of the most underrated and overlooked topics in personal finance is why it is so important to have and maintain a good credit score. So in today's video, I'm going to show you how I improved my credit score from 0 to 750 in just over 2 years, and I will give you a clear-cut guide on how you can do exactly the same. Now, I know that there might be some skeptics out there saying,
Pieter, what are you talking about? Anything related to credit is bad and should be avoided at all costs.
And yes, that is also what I thought when I blossomed out of university 2 years ago. But as you all can probably relate, life has a tendency to klap you warm when it comes to ignorance and gullibility. So I quickly learned that taking out credit and having and maintaining a good credit score is extremely important. It's just how the system works, and there's really nothing that you can do but to learn how to make the best of it. Okay, so let's warm up with some statistics. I got this info from the Save Life Thrive Instagram page, where I will link to down in the description, and although it is based in America, the message should be pretty clear. Right, so let's say you want to take out a $250,000 home loan over a 30-year period. With a good credit score, in America, you should be getting an interest rate of around 2.7% with a monthly mortgage payment of $1,197. But with a bad credit score, this interest rate could increase to 6.16%, resulting in a monthly mortgage payment of $1,438. This is a difference of $241 per month, which is not that bad, right? Well, take this over a 30-year period, and this will amount to a shocking $86,503. The same goes for a 5-year car loan of $20,000. By having a good credit score, you can save $7,537 over just a 5-year period. Now, I know that these numbers may not sound too scary for us South Africans, but multiply this by 15 and you will get the rand equivalent. Convinced yet? Good. Now we can start having the real conversation. Okay, so for those who are completely new to this concept, a credit score is basically a 3-digit number that reflects how good you were with paying off debt in the past. It is calculated based on a couple of different factors that are found on your credit report. Now, a credit report is very similar to the report you received at school. Just as you had different numbers that reflected how well you did in each subject, your credit report has a list of your payment history to various past creditors. So, for example, when you take out a cell phone contract, credit card, home loan, or just a simple store card, your repayment habits are reported every single month by the creditor that issued you the credit to what is called a credit bureau. A credit bureau is basically just a registered company that collects credit information from all the different credit providers, and then these credit bureaus are responsible for compiling your credit report and in turn calculating your credit score. Now, in South Africa, there are basically 4 main credit bureaus: Experian, TransUnion, CompuScan, and XDS. What makes things a little bit confusing is that not all credit providers will report to the same credit bureaus, and each credit bureau has its own set of rules on how they will calculate your credit score. And if this wasn't enough, each one of them also has their own credit scale as well. So you would notice that if you check your credit score at each one of these different credit bureaus, your score will be different, which is a bit stupid and something that I really wish that they could just simplify and standardize in the future. But regardless, each credit bureau will be able to tell you if your credit score is excellent, good, bad, or perhaps atrocious based on their own specific scale. And FYI, if you never took out any credit in your life, chances are you have a credit score of 0. Again, it doesn't help you try and argue with this. It is just how the system works, as from a credit provider standpoint, They want to see how good you are with paying off debt before they decide to issue you any credit, because this helps them to measure the amount of risk that they will be taking on. If you have no credit history, then they will have no real way to tell how risky it would be to approve your credit application. So if you don't know what your specific credit score is, then I want you to either sign up with ClearScore or TransUnion, and I will link to both of them in the description. ClearScore is a service from Experian which will show you your credit score and credit report for free, while TransUnion will give you one free credit report every year. But if you want to see your credit score, you will need to pay something like 80 Rand. It doesn't matter which one you decide on. I do both just to make sure I don't miss anything, but ClearScore is for free, so it probably makes the most sense to go with that. Now, in order to know how to increase your credit score, we need to see how it is calculated in the first place. The biggest factor affecting your credit score is your payment history, taking up about 35%. This is rather straightforward. The better your track record for paying off your debt on time is, the higher your score will be. So make sure you pay your credit card and store card bills on time every single month, consistently, and try not to miss a single payment. Something that can also severely affect your payment history is if there is an error on your credit report. For example, if the credit bureau accidentally recorded a faulty default or court order on your profile. The credit bureaus are managed by people, and people do make mistakes. And identity fraud is more common than what you would like to think. So it is very possible that someone used your personal information to open some sort of credit account that does not belong to you. That is why it is extremely important to check your credit report every single year, as if there is an error, this can send your credit score into the ground crashing without you even knowing about it. If you notice anything strange or abnormal on your credit report, then simply log a query or dispute with your credit bureau and they will gladly assist to correct it. The second biggest factor is your credit utilization, which makes up about 30% of your credit score. Credit utilization is basically how much of your available credit you use every single month. So, for example, if you have an available limit of 10,000 Rand on your credit card and you use 5,000 Rand per month, your credit utilization would be 50%. This ratio takes into consideration the sum total of all your spending on all your available credit cards. So if you have two credit cards, one with a limit of 10,000 Rand and the other of 50,000 Rand, and you spend 5,000 Rand on the first credit card and 10,000 Rand on the second credit card, your total credit utilization would be 5,000 plus 10,000 Rand divided by 10,000 plus 50,000 Rand, which is 15,000 Rand divided by 60,000 Rand, which results in a credit utilization of 25%. Now, if you max out all your credit cards every single month, this will signal to the credit bureaus that you are kind of depending on your credit, which will increase your perceived risk, and this will in turn lower your credit score. So the lower you can keep your credit utilization, the better your credit score will be. The general recommendation is to keep it below 35%, but ideally you should aim to keep it below 10%. If you are currently using too much of your available credit, then you need to either reduce the expenses you put on your credit card, or you need to request your bank to increase your credit limit. Guys, if you only do these three things, namely correct any errors on your credit report, pay your credit card bills on time and in full, and keeping your credit utilization ratio as low as possible, then you will have a good credit score. That is all that I did, and after about 26 months, I now have a credit score of 750 with TransUnion and 673 with Experian, which is very close to the maximum that you can get. The next factor affecting about 15% of your credit score is the length of your credit history. The longer you have a good track record, the more data is available on your ability to use credit responsibly, and the better the credit bureaus are able to assess your level of risk. Building a good credit score takes a lot of time and patience. It won't simply just happen overnight. But the important thing is just to get started as soon as possible. Obtaining credit is kind of like a catch-22. You need a good credit history in order to build up a good credit score, but you also need a good credit score to be approved for credit. Now, I will make a separate video on how exactly you can go about building a good credit score from scratch and how you can get approved for credit if you already have a bad credit score. But in short, if you really cannot get approved for a credit card with your bank, then just go and open a store credit card with your favorite retailer. You are much more likely to be approved for a store credit card, and once you have one, just buy small inexpensive items and make sure to pay it off every single month. This will at least get your credit score going, and after a while you can apply again for a credit card, self-employed contract, or even an insurance policy, as all of these will be added to your credit history track record. But just be careful. Do not apply for too many credit products all at once. Every time you apply for credit, the credit provider will request what is known as a hard inquiry from the credit bureaus, and this will leave a temporary mark on your credit report. If you have too many marks in a very short period of time, this could signal that you are desperate for credit, which will again increase your perceived risk and in turn negatively affect your credit score. Now, credit applications make up about 10% of your credit score, and these hard inquiries stays on your credit report for about 12 months. So always make double sure that you really need to take out a credit product before you even apply for one. Checking your own credit score and report counts as a soft inquiry, and this does not have any effect on your score, so you can check your own score as often as you'd like, so you don't have to worry about that. A good rule of thumb is to only apply for a new credit product or an increase on your available credit once every 6 months. And then the last factor affecting your credit score is your credit mix. Credit can basically be classified as either secured credit or unsecured credit. Secured credit is any credit that you took out that can be backed by an asset, such as a house or a car. Unsecured credit is credit that is not backed by an asset, and these usually include credit cards, store cards, personal loans, and overdrafts. Secured credit is usually seen as safer in the eyes of banks because if you cannot repay your home or your car loan, the bank can simply just take back your house or car in order to cover their losses. Now, having a combination of both types of credit will help to increase your score as opposed to only having unsecured credit, as this will signal to the credit bureaus that you are able to responsibly manage many different types of credit. With that said, this only influences 10% of your credit score. So don't go out and take out a car loan unnecessarily just to improve your credit score. In fact, if you have a bad credit score, then if at all possible, first focus on improving it before applying for any home or car finance, as you've seen what a massive difference it can make over a couple of years. And then apart from all of these factors, paying off any remaining debt you have, especially unsecured credit like credit card debt, store card debt, and personal loans, will also have a drastic effect on improving your credit score. Just remember, this will not happen overnight. Building a good credit score takes years of consistently applying the steps I mentioned earlier, and most importantly, not taking out any debt that you cannot afford. The word credit is being slandered by many, as there is no short of horror stories of people drowning and being consumed by debt. But the reality is, there's a very high chance that you will need to take out credit at some stage in your life, usually to buy a house, and in order not to waste hundreds and thousands of rands, you will need a good credit score. So the earlier you take out credit and the sooner you learn how to use it responsibly, the better off you will be in the long run. And the sooner you start, the more time you'll have to reach the top level. I only started building my credit score when I was 24 years old because I didn't know any better. School didn't teach me jack about credit, and I didn't really have a mentor to tell me this either. So if you just turned 18, go and build your credit score. You will be better off than 99% of the population if you one day need to apply for your home or a car. And if you are an old bully like me and you still haven't started building your credit score, then it's never too late. The important thing is just to get started. Thanks for watching, guys. You must all have a lekker day. Cheers.